Hello and welcome back to the complete day trading course by Wealthy Education. In this video, we're taking a look at flags and pennants. So let's start by defining a flag and a pennant. And they're both consolidation patterns at the end of a long move. So for example, you will have the market going higher or lower because there is an inverse as well. So you have a trend going higher, and then what happens is you run out of a bit of momentum, and then you fall or you rise, and this is a flag. Now, the thing about a flag is it has a little bit of a pullback. So the market goes this way and then does this. And it winds up and it pulls back just a little bit. And on a break of the flag, it should continue. Now it's the same thing over here. We go lower and then we bounce, we pull back a little bit and then eventually break down. So how do we trade this? Well, the flag's very easy to trade because you take a break of the uptrend line. You put a stop loss either on the other side of the flag or in the middle of it. It just kind of depends on your risk appetite. And then from here, you extrapolate the pull of the flag. So the pull is what the initial move was. So say this is, let's just say, for argument's sake, this is $3. Well, on the break of this, you're looking for $3 from the breakout point. Not from here, but from the breakout point. Same thing over here. If this fall and this pull here was $1, once we break down, you're looking for a move of $1. So that's a flag. Pennant is the exact same thing, but with one caveat. So you've got your bullish and bearish pennants, but it comes down to the consolidation at the end of the pull. It doesn't necessarily have to pull back a little bit. A lot of times it will, but it doesn't necessarily. So sometimes you'll see it like this. Looks like a pennant flying in the wind. Same principles apply here, though. Stop loss on the other side of the pennant. Take your measured move. If this is $1, then you want $1 on the breakout, and so on. So it is the same it's the same technical setup. It just refers to the consolidation area where price gets stuck before taking off. So let's take a look at a couple of examples. I've got a couple of bearish examples ready for you on the charts. In this case here, this is Apple 5-minute chart. You can see that we broke down and we pulled back a little bit. You can see that there was a clear channel that we were pulling back. This bearish flag represents a potential move of, let's see, this is 186 and this is 183, so $3. So move from 183.50 down to 180.50 would be the target, which is basically right about where we bottomed out. Now, that's a pretty clean example. There are, other messier bits, but the idea of a flag is you want it to be as obvious as possible because you do want other people jumping in. The more obvious a flag is, the more people are going to say, hey, I want to trade that. Then it works in your favor. So here is a little messier pennant. Go ahead and draw this out here. So there's your pull. There is your pennant. Oops. I guess the pull is more like that. And you can see that it measures for a move from 117 down to 115, so that's $2. On a break below, you expect a move of about $2, so right around 113, and that's where we stopped the next day, and then gapped a little lower and continued to go lower than that. Pennants, typically, I would say, and as a general rule of thumb, the flag is a little bit more reliable only because it's so much more obvious. With all technical analysis tools, it works better on the higher time frames, but 5-minute charts work as well. I just showed you a couple of examples. Just keep in mind that your risk appetite determines the stop loss. So, for example, if you are shorting a bearish flag on a breakout, You can put the stop up here or in the middle. It doesn't really matter. It comes down to how comfortable you are. And a lot of times what I'll do is, so if this is $3 and the aim is $3, I'll go ahead and take like profits at 285. There's no need to miss by a tick or two and then have it go back against you. So I try to take most of the move. I might be risking, say, 20 cents here, aiming for 285. Nice, simple play. Flags are traded all the time. And again, the more obvious, the better.